Hello my friends, I hope you're having a good day. In this video, I want to talk about sector rotation and specifically an Excel tool that you can use to identify the hot sectors and therefore making more money. So without further ado, let's get started. Okay, so based on Investopedia, sector rotation is the movement of money invested in stocks from one industry to another as investors and traders anticipate the next stage of the economic cycle. When people talk about the stock rotation, they usually talk about this diagram. Basically, you have two cycles, the economic and the market cycle. Using the economic cycle, you can understand where the market is. So for example, in last year's COVID crash, the economy was in recession, and that means that we were in this area and it was best for you to buy stocks in technology to make the most profit. Actually, there is a really good YouTube video that explains this cycle better than me. I put the link in the video description below, so please pause my video, watch it and then come back. Okay, now that you have a basic understanding of sector rotation, let's talk about this graph. Just so you know, this particular page of the stock charts website is free. Again, all the links are in the video description below. You can see in this chart that we have 4 stages and each stage has its own characteristics. So if you find the current consumer expectations, the current industrial production, the current interest rate and the current yield curve, you might be able to identify which market stage we are in and therefore identifying which sectors are best to put your money in. There are many websites that can give you the information you need on these 4 lines, but let's say you did your research and found that consumer expectations are declining, industrial production is flat, the interest rate is rising rapidly, and the yield curve is flattening out. Then you can say that we are in the full recovery stage and the best stocks to buy are energy, materials, and consumer staples. But first of all, that's too much of a work. And second, this is a great diagram, but it only gives you the big picture. If we scroll up, you can see that there are some stuff here that we haven't talked about yet. This is called a perf chart. This chart basically shows you the performance of the major sectors ETF and the SPX on a specific time period. As you might know, we have 11 major sectors. Here you can see all of them with their largest ETF. Also, the SPX is an index that shows how the 500 largest companies are doing in the stock market. So you can think of SPX as the whole market condition and these ETFs as the condition of the major 11 sectors. On the right, this axis shows the performance. On the bottom, you see a slider where you can change the time period, and on the top left, you can see the period where the data is extracted from. So for example, in the last 2 days, the real estate, utilities, and discretionary sectors have had the best performance. But in order to improve our understanding, let's make the performances relative to SPX. So I'm going to click on SPX to make all the numbers relative. Okay, so now you can see that it's easier to understand which sectors are having good performance. Let's double click on the slider and put 50 days. Based on this picture from February 19th to April 30th, relatively speaking, the real estate, financial, utilities, materials, and industrials have been the best sectors. Let's scroll down and look at this chart again and identify where we are. So I'm going to mark all the hot sectors based on the perf chart diagram with 50-day time period that we just saw and try to find which market stage we are in. As you can see, it's hard to identify which market stage we are in. Like I said, this graph is supposed to give you the big picture. You can try different time periods and you will come to my conclusion. But I want to show you a quick way to identify whether we are in a bull or a bear market. Let's divide all these sectors into 2 groups, the bulls and the bears. The energy can act as the middle guy. So now let's see which group is performing better over time. I'm going to keep clicking on here and observe the changes to see if any sides are performing better. But I don't see any overweight on each side. Now let's go back to March 2020. Here you can clearly see that the bulls had more weight and therefore we were in a bull market. Overall, this perf chart is a great tool, but problem is that I want something to predict the future. Some websites give you good information on this. For example, the Zacks research group gives you the sector rankings. But I accidentally came with something that is called relative rotation graph. Basically, it's a chart that shows you the trend of a stock. It does it based on the relative strength and price movement. On the x-axis, you can see the RS ratio, and on the y-axis, you can see the RS momentum. Don't worry, you don't need to know what RS ratio or RS momentum is. If we set 100 and 100 as the start point of the y-axis and x-axis, we will get a graph with 4 areas, and based on the stock RS ratio and RS momentum, the stock can fall into one of these 4 areas. The top right area is where the stock is bullish, and the top left is where it is bearish. If you're interested, you can read this article on stockcharts.com. Now, if we can get this chart for each of the sector's ETFs, the problem will be solved. We can predict the future and we know where to put our money in. Great news is that you can have this on the stockcharts.com website, but this feature is only for the StockCharts premium user. I didn't have the subscription, so I decided to make something similar on the Excel. To do it, I followed the instruction on this website. You can go through it to understand how to make the tool, but I will be happy to share mine with you. Just put your email in the comment section and I will send the tool to you. Now, let's look at the Excel sheet I developed based on the article. But before getting into that, guys, can I ask you something? Can you please help me to grow my channel by subscribing to my channel, liking and putting a comment on this video? Thank you. Now let's dive into the Excel. On the data sheet, you can see all the data I used to make the graph. First, I imported the data for SPY and the other 11 sectors from investing.com. I did this for all the days from January 4th up to April 30th, 2021. Then here you can see the calculations. You don't need to touch anything here. In this section, you can find all the data I used to make the graph. One important piece of data is the time period for which you want the calculations to be. Think about this as a moving averages. When we say 20-day moving average, it means that the calculated data is based on the past 20 days. This 20 days time period has the same concept as moving averages. Next, I copied all the information in this section to the graph sheet, but to make it simple, I created this drop-down menu so it only shows the data for one type of ETF. So if you open the drop-down menu and choose, for example, XLF, you can see all the RS and RM data related to XLF or the financial sector. The first one on row 4 means that on the April 30th, based on the past 20 days time period, the RS and RM of the financial sector was around 103 and 99. By the way, these data are normalized. So if we plot these data, we will get this graph. To read this graph properly, you need to identify the first point, which is April 19th, right here. Then you need to know that there is a cycle here, meaning that if an ETF is bullish, it won't be bullish forever. At some point, it starts weakening from bullish to bearish, and then it goes through the full bearish stage. But it cannot be bearish forever. At some point, it will start to improve from bearish to bullish, and finally it gets back to its bullish stage, and this cycle repeats. So in our example, you can see that this ETF on the 20-day time period kind of followed the cycle rotation, and right now it is weakening from bullish to bearish. Same as a moving average concept, if you want to reduce noise and errors, you can simply increase the 20 to, let's say, 40. If you see N/A, that means that there are not enough past data to calculate the RS and RM for that specific date, which are all the days after April 21st in our example. But you can see that in the 40 days time period, the path on this graph is much smoother. Now let me put it back to the default 20 days. One thing I forgot to mention, this graph only shows 10 points and I have highlighted those data that I used to make the graph. Feel free to make the graph with more points, but I found 10 points to be the best. Now the last thing that I want to talk about is how to keep this Excel up to date. Remember that the Excel sheet that I will email it to you is up to date, but after you get it from me, you need to keep it up to date if you want to use it on a daily basis. First, you need to import new data. You can simply add one row or a couple of rows here, depending on how many days you want to add. Then you need to add your data either manually or copy paste from another source. I personally do this every day after the market closes by just typing the new numbers. Remember that you need to do this after the market is closed so that the numbers won't change. But if you need data for many days, you can access the data on investing.com website. I will show you quickly how to download the data. On the investing.com website, you need to first search the name of the ETF, let's say XLE, and then you go to historical data, and then you choose your timeline, and finally you download the data. Once you have the data for all of the ETFs and the SPY, you just need to copy and paste them here one by one. Next, you choose this line, and you drag all of it up. Please remember that you can't drag up the first column because Excel doesn't know the stock market working days, or at least I don't know how to do that on Excel. So you would need to write the dates manually. The last thing that you need to do is to come to the Graph tab, add new rows here. Then you choose this line, drag up, and you will get the new RS and RM numbers for the new dates. But you also need to update your chart. So to do that, you click on here, right click, select data, edit, and you click on the X values. You delete all this stuff here, and you add your new data, and you do the same for the Y values. And you're done. Now, before I finish this video, please understand that I'm not a financial advisor, and this video is for entertainment purpose only. With that being said, I hope you found this video beneficial, and I will talk to you guys in my next video.